Good morning, good afternoon. My name is Gabriella Kindert, and I'm truly delighted to moderate this panel regarding Estateguru. The title of our webinar is Estateguru Superior Risk-Adjusted Return and Sources of Alpha Generation. And I'm really excited to welcome three fellow panelists from Estateguru, from the management team, Marek Pärtel, Judith and Luts from Estateguru to talk about the key features of our digital underwriting proposition. Today we are going to have a presentation of approximately 40 minutes, followed by Q&A. So I very much encourage you to send your questions, comments, some additional clarifications you want to hear from us. We are here for you, that you understand our proposition better. So please allow me to start basically asking the panelists to introduce themselves. Maybe we can start with you, Marek. So my first question to you, who you are, what is your background, and what is the reason that you actually established Estateguru?
Well, thank you, and good to be here. My name is Marek, and I'm the co-founder and CEO of Estateguru. My background, I studied in University International Business and in Estonian Business School and the Stockholm University. But basically, I've been an entrepreneur all of my life. The only paid salary I had was in my father's construction company, where I was a director of marketing and development. But in 2005, I started to do real estate business. Started as an investor, doing smaller deals. Then became a developer, started to do smaller developments. And I'm still a partner of one of the leading property development companies in Estonia, but I'm a passive partner since 2013. I started to build Estateguru. So that's maybe shortly about my background.
Okay, thank you. Judith, maybe you can explain who you are.
Hi, my name is Judith. I've been a banker for over 20 years. I started my career at Morgan Stanley in the US as a trader a long time ago. And then I was at Lehman Brothers, and I came to the UK about 20 years ago. And I've been involved in various banks. So I was at Commerce, Nomura, and then Investec most recently. And I spent a few years advising funds and property funds on capital raising and asset disposals and restructurings.
And what was the reason that you joined Estateguru?
I joined Estateguru because Estateguru has an incredibly strong management team, incredibly diverse. From country, there's 21 different nationalities represented in the company. And also, the company offers a very unique proposition. They are able to give institutional investors access to SME lending across Europe, and I found that very compelling, and that's the reason why I joined.
Excellent. Thank you so much. So, Andres, who are you, and what are the reasons that you joined Estateguru?
Hello, I'm Andres. I'm currently Chief Risk Officer at Estateguru. I joined Estateguru 3 years ago. And I've been involved in banking over 10 years, mainly concentrating on real estate financing and credit risk underwriting. And it's a funny story. I ended my career in banking over 3 years ago and took some time off, and Estateguru approached me. And I think that the main reason why I joined is that they had a good vision how to improve the SME financing using technology, market knowledge, and reduce the bureaucracy in financing.
I very much agree with you. Actually, I also joined Estateguru 2 years ago. I knew Marek from different conferences, and I truly agree with your comments about the strength of the management team. It's a truly inclusive, truly interesting concept and company to work with, and I'm really delighted to support the franchise as an independent board member. Before we go about Estateguru, I want you to comment very shortly about some of your hobbies, just something that we can't read about you. So Marek, what are your hobbies?
I now remember that I actually didn't answer the last part of your question, that why I founded Estateguru. because being in the real estate business since 2005 and actually going through the last financial crisis and being the developer back then, I actually understood that banks, when there's a saying, and that banks give you umbrella when sun is shining and take it away when it starts raining, and this is exactly what I experienced. And these were the private investors actually who basically helped us to finance our deals back then. And it took us some more years then to start building the platform. So it was really like a personal experience of why we need this kind of platforms and alternative financing. So that was it.
Another hobby. You are not avoiding the hobbies,
hobby question. I've been always playing something with rackets. I started as a tennis player, and then I was 6 years in Estonian team in squash, traveling all around Europe with Estonian team. And I think it's
a competition.
This has definitely gave me some to work under pressure and in different difficult circumstances and to reach the goals. And I think it's quite. When I now hire people, also we have a lot of professional sportsmen actually.
Yeah, absolutely. It helps. Judith, what is? Very briefly.
Well, I started quite late. I didn't have very many hobbies in America, obviously working, but I started actually sailing quite late. And so I sail lots of long races, 600 nautical miles from Ireland to England, the Fastnet races. And so in the racing circuit, very passionate about it.
Excellent. Andres, do you want to share something?
Yes, so I've been involved in boxing for over 15 years. So
okay.
That
helps.
Practice.
The management team.
Yeah, it helps to fight.
Excellent. As a head of risk and chief risk officer, I think you need that.
Yes.
Excellent. Now, thank you so much. So maybe we can talk about what is Estateguru today, and I would appreciate if you would bring up slide number number 1. And Marek, maybe you can explain what is Estateguru today.
So basically, when we started to build Estateguru, we studied different business models back then, 2013, when Lending Club has started in the US and Funding Circle was in the UK, and different other real estate related business models. And we decided to build a platform that actually facilitates the most secure products that can be in the real estate, which means that they are mortgage backed. They are first, like banks are taking the senior position. 98% of our projects or loans that we are facilitating to our investor base are first rank backed. Plus, there are also most of the cases we have personal guarantees on top of it. So.
Marek, sorry for interrupting you. How did you arrange that? Because it's really very unique about this platform. Most of the peer-to-peer lending platforms that are, listed like Funding Circle, Credit Shelf, they are lending on an unsecured basis. So how do you arrange a security?
Yeah, of course. We need to have partners in place in different markets where we're operating. So the securities are held by trustees or security agents. We're working with the leading legal offices in different markets, and basically, yes, these trustees are holding the security on behalf of our investors. It's more to talk about it, but that's like a high level how we do it. But regarding the business model, we currently have 3 products that we are facilitating and offering to our clients. They're bridging loans, they are property-backed business loans, and development finance for SME developers. And from the other side, then we have currently 130,000 investors of different profile and type. Retail investors, high net worth individuals, family offices.
From which countries are they?
Well, no countries are really we have. I think nationalities are more than 100 countries. But our investors they should have European bank account, and we take AML and KYC very very seriously. So we should be very sure that the money is clean, but the nationalities they can be from all over.
Excellent. Thank you. Maybe you can walk us through the key facts about Estateguru, just to remind us.
Sure. So to date, the company's originated 550 million. We've paid out about 42 million euros of investment, 11.2% interest rate, and we have 117 employees in 8 different countries. So
actually, we have paid back more than 300 million, but we have paid 42 million of interest.
That's right, to be correct. Yeah.
Thank you. So we already established some of the unique features of Estateguru, like the diversity of the management team, the secured nature of the underwriting, the multi-jurisdictional features. What do you consider truly unique about Estateguru, Marek? And I link this back to your vision. So maybe you can help me with pulling slide number 2, talking about the technology infrastructure.
Right. So coming from a small country like Estonia, our entrepreneurs have always very big visions. They actually, when they start solving the problems, creating something new, they think global. While some maybe entrepreneurs in Germany or UK, their home market is big enough that they don't maybe in the first place think about it. And of course, when you want to make a big company and make global impact, there's technology that actually solves these issues, how you get there. And we're developing basically at the moment ecosystem for real estate investments and financing. And we're developing technologies in different verticals, starting from loan origination. So how we really find the deals, what kind of channels and sources we're using to get them, how we're scraping the data and finding these deals. So that's definitely a very important part in order to, let's imagine that you have a shop and you have to have goods for sale, and when you have a good variety of goods to sale, then buyers will come and you can make business. And that's the basis also in our business, that we need to really have the variety of different loan products. And what is unique in our case is that we have seen there are some local platforms that are trying to do the same thing. In our case, what we are doing, we're creating the pan-European ecosystem so that the investors would have the variety. And they can diversify not only between the different loan products, but also between different countries. And because real estate markets are different, and in some markets, and also some investors, they prefer to invest in one market, maybe not in other markets. So that's the loan origination part and technology. And definitely in the risk management, Andres can tell more what we're doing in the risk management, and with the help of technology, how we're trying to make it more efficient and quick.
So when we onboard a client, then we use as much as possible external parties, credit bureaus, automated valuation models to assess the client and give a quick opinion of their collateral, of their business model, of their financial status. And of course, we do, like Marek mentioned, the AML KYC in a very thorough way, and try to minimize the manual work. So, but it of course remains. So the final decisions are always made by humans right now.
So going back to your original question, Marek, you said you wanted to solve a problem. Do I understand correctly that the problem you wanted to solve is access to financing and enabling investors to have viable, interesting digital investment products, connecting these two by technology?
Yes, being in the both sides of the table myself, very often I came across the situation when I had a great project, but either banks were too slow in making the decisions, or they were too much regulated to make this type of short-term loan. And we trying to be very kind of down to earth in this sense. And when we see that the business plan really makes sense, and there is a collateral that we can take as a security, the liquidity of the collateral is there, then we try to offer the financing within a week or 10 days, while in banks it takes 2 to 3 months very often.
Yeah.
And for investors, same time, I guess most of people value real estate as a great investment, having their own home or having some bigger investment properties. But there are millions and tens of millions of people actually who would like to get access to this asset class, and maybe they only have 100 euros or 1,000 euros or 10,000 euros to invest into property, and they would like to do it in the most secure way. And that's what we're offering to them.
Exactly. So if I'm an investor, if I want to have a fixed income product, of course I can buy a house, but then most of my assets and most of my money is tied up. In case of Estateguru, I believe from minimum of 50 euros, you can have a portfolio.
50 euros is the minimum investment at the moment, what we have per deal. Yeah. So with 1,000 euros, you basically can have a diversified portfolio of 20 different investments in different countries. Yeah. And we also currently we're developing a new product that we would like to get connected to other wealth tech or fintech platforms, and also bring the minimum investment amount to 10 euros. So we're clearly building the brand of real estate financing and investments that also not only for institutional investors but also for retail investors.
Excellent. I mean, 130 retail investors.
1,000.
Sorry, 130,000.
Yes.
Did I say million?
No, you said 130.
Okay.
That's okay.
All right. So let's talk about the underwriting process, and maybe you can help me to pull slide number 3. Maybe I turn to you, Andres. What is the role of technology in decision making, and how is the origination process, and can underwriting be truly digital?
Mm-hmm. Good question. So what we have done is that we have built a scalable loan application platform, which means that everything related to borrower, related to collaterals, related to the credit memo is saved on our database. We have standardized it as much as possible. Of course, every country has their own nuances, aspects that we need to take into account. Mm-hmm. Also, what we did is that we integrated different APIs to this platform, starting from credit info, credit safe, also automated valuation model providers, Scenario Labs, Idealista, and we try to use them as much as possible to help the underwriting to become efficient and more sophisticated. We are currently also integrating a rating agency to our platform to basically try to make some automatic decisions, but only when the limits are smaller and the collaterals are standardized, for instance, an apartment in city center. And of course, like you asked, we cannot not take into account the manual decision process or aspect in the process. So basically all the decisions in our credit underwriting are approved by a human. Mm-hmm. So I have built a team that every credit manager is responsible for one country or one region.
And they are sitting in the country?
Yes, especially in the larger countries, Germany and UK.
Are they also boxers? Are they also boxing?
Not yet, but okay. I'm working on it. So.
Okay.
So, and of course, they are being helped by local country managers, loan managers who are bringing in the deal. So we have the local knowledge in every decision. And I think that technology will take more and more over, but the human touch will remain.
Yeah. What is important for you when you make this decision? So what is the alignment of interest you are looking for in terms of loan to value?
So historically, our average loan to value has been slightly below 60%, and currently we haven't changed our risk appetite, so it's still medium. We have defined it as medium, which means that on average, the LTV should be 55 to 60%. Of course, we go higher in very liquid areas, in city centers, with very good collaterals and strong borrowers. But when we analyze, we have divided the process into three parts. It's borrower, collateral, and the business plan. So we analyze always the track record of the borrower, their financial status, their liquidity buffer, and even though we use external collateral valuations, we do our in-house valuation. So we want to be sure that the valuation is properly done and the market value is fair.
Mm-hmm. How many projects do you approve? So how many are you getting and how many are you approving?
So in general, I would say that we are approving like 10%, so 90% are rejected due to various reasons, but the main ones are that collateral is illiquid, borrower is weak, and the business plan and track record isn't there. So these are the main reasons.
Do you use alternative data also to assess the borrower, like, check on internet, some market intelligence that are not written anywhere? I mean, you have a lot of experience, Marek, on the real estate market. Do you also use this belly feeling or, market intelligence and knowledge besides artificial intelligence?
No, we're making different checks, of course, in social media also, and all this. Currently we have a very important is to look at the sanction lists and that we really not dealing with some so to say bad people, and so yeah, it's different data sources that they are looking. But maybe one thing to add to Andres is that we recently also built our data team, and now when we have a track record of seven years of actually doing this business, there is a lot of data points also from our previous track record that is very helpful of making the right risk decisions.
So do you use it also if you don't have if there is a new borrower, do you have a different matrix for loan to value? So you want to have more alignment of interest, or how do you implement this? Do you have some favorable borrowers that are repeat borrowers and come back to Estateguru all the time?
Yes, of course. So the current borrowers who want to get new financing are always first in line to get better offers and lower interest rate. And yes, we have a pricing matrix which takes into account if the borrower is new, their track record, their previous business volume. So everything is in our models.
Okay, excellent. So of course things can go wrong, yeah, and maybe you can walk us through an example or some examples what can go wrong and what you do if things go wrong to protect the interest of investors.
So we have built a strong team, which is, when we talk about defaults and problematic loans, which is led by our headquarter level debt collector, and also we have a specialized default lawyer. We have partnered with different debt collection agencies in every country, and also legal help is there. Usually what goes wrong is that the borrower maybe overestimates their timeline and their financing and equity part. So what we have done then is we tried to find solutions. So for instance, in Latvia, we just had a big case where we found out that the construction costs had risen, and fortunately the borrower had additional collateral. So we offered a small loan against it and then financed the construction overrun and finished
the term was 1 year,
Yeah.
and he was running late.
Yes, he was running late, and we wanted to finish the construction, not to freeze it. and we just gave him a small loan against this additional collateral, and everything turned out to be good, and we exited the project. So,
excellent. What can you say about our historical loss, Judith, and what is our track record so far?
So, I mean, historical loss is like, I think, 1 basis points overall. I mean, over a 13-year period, I find that very impressive.
1 basis point.
Yeah, 1 basis point.
And the PD, so the actual default?
Well, the default level, so the actual sort of default levels vary from country to country and also by vintage. But, you know, I guess the one thing that you would find interesting about Estateguru is that the net loss figure is quite low. So to sanctify that is that it takes time to obviously recover on the debt. So the average loan is, you know, from 14 months, call it, you know. So if the borrower is late after 9 months, you know, there's a process by which, you know, the enforcement starts and discussions start in terms of, you know, collecting the payments. So, you know, we've had, obviously, people weren't asleep during COVID, but, you know, things got delayed a bit. So, you know, you do have that sort of creep, as it were. But I'm very proud to feel that the company has done very well overall, and that their net loss rate is quite low, and probably Andres can probably comment further on that.
Maybe if I may add some statistics, because I remember these numbers. It's very, very, very important, and very proud of it. That even our default rate has been historically between 5 and 8%. It doesn't mean that no, in case of SME lending, very often this money people are writing off because there is no collateral. In our case, the recovery has been actually 109% from the defaulted loans, which means that investors get back their money maybe 9 months later, but they have also received an average 9% return of it. And that's actually the beauty of taking the first rank mortgage and personal guarantees. And
of course, if they have their equity invested, they are going to run to make sure that their 40% or 50% equity contribution is not becoming a total loss.
Yeah, exactly. Either they find the buyer themselves, or we sell the collateral in the auction process, or we also have sold some claims to have a quicker recovery. Now after 7 years of track record, we have different experiences already dealing with these default cases.
And Anders, how do you ensure that you can intervene in this situation? So what are the elements in the loan contracts that you use? Do you have a pre-agreed default interest, or what are the instruments you use to intervene?
Yes, so we have very strong loan and user terms, where we have defined the default interest, which is the nominal interest plus 15%. Also, we have very good conditions to end the contract, to go into enforcement, and basically take over the collateral if needed. So sometimes we even take over the collateral if the borrower wants additional time, and so our terms even allow that.
So you want to maximize the risk-adjusted return for investors in all cases?
Of course, yes. So that is the goal of risk department, to get the money back as fast as possible with maximum returns. So
why as fast as possible? Because is it important to have the money as soon as possible? Why is that? Is it the return, or is it the timing?
I think both, but no. I think when the case is fresh, then the borrower is more helping and more into it. So when we start delaying and waiting, then
the process.
Yeah.
Marek has a very clear view on that as a developer himself as well.
I just wanted to add that, of course, we want to keep our investors happy and not nervous about having some loan in default. And in this sense, of course, the sooner we get the case solved, the happier our investors are, the more sticky the money is staying on the platform. And what we have seen that actually 80% of the returned money actually stays on the platform. So if we now compare like deposits and withdrawals in the platform, it's about 80-20, and I'm confident and sure that our risk management and our credit department excellent job is a reason for that. That if the default would be higher and the recovery period would be longer, then withdrawals and deposits wouldn't be 80-20, but maybe 70-30 or even worse. So our definitely goal is to build a track record and to build a sustainable business here.
But I think it's also important here to manage expectations, because if you are in a business of like 12 months or 14 months average term loans in a phase where things can be delayed, then it's totally normal that some of your projects are in default because they are late, And the issue is that you have to make sure that investors are rewarded and not panicking as a result.
Yes, absolutely. And that's why we have the default interest. And as you said, yes, things can go wrong. And in some cases, they can also go to the lengthy bankruptcy process that we also have experienced. And that's the reason why we suggest our investors to diversify, to have at least 20, maybe like 40 plus different investments, so that if some of them get delayed or goes into default, your annual interest is still 10-11%. That's what we have experienced during these years.
Absolutely. You mentioned a very interesting statistics about the defaulted loans and the interest rate. I still want to have a question to you, Andres. So how many loans have you issued, and on how many did you lose principal? This little 1 basis point you mentioned.
Like Judith mentioned, so 1 basis point, we have issued 500 million.
But how many loans?
How many?
3,500.
3,000 loans.
Yes.
And on how many did you lose principal?
2.
2.
Yes.
Okay.
Only 2.
Excellent. So if you had, Marek, 100 million, how would you invest? What would you recommend for an investor?
So I always tell to my friends who ask, Mark, I have maybe about 1 million, but maybe some amount, 10,000 or 100,000. I always say that it's about diversification. I said like with 1,000 euros you can do 20 positions, but no, actually I would with 100. You said 100 million.
Yeah, 100 million.
100 million. I would do at least 200 positions. Maybe even like 300 positions or so.
Can you deploy it? 100 million?
Yes, yes. Currently, our loan origination team has really done a good job, and we have a pipeline as we're operating now in eight markets. So we can basically put more fuel to the rocket of the origination team in specific country where we need to originate more. We see that there is still the gap in the market, and the SMEs are still underserved. And yes, basically we are ready to definitely originate more and grow our volumes.
Excellent. Judith, what would your approach be?
Yeah, I would say something similar. I think Estateguru's got quite a very healthy origination. I think we have 500 million loans actually going to needing funding, of which 40% is coming from Germany. So, I think 100 million go very far in terms of investing in these portfolio of loans, really, on a very diversified basis. Also, from a risk-return perspective, you're looking at maximum LTV of 75, but if you really look at the weighted averages, they're quite low. In the newer countries, I know we actually don't advance as much when we go into new countries as well. So I think 100 million can go a long way.
And what can be the return?
Well, I think you can easily hit like 8.5% to 9% net, and after cost, which I think is very healthy for this product. Your gross returns have been 11% historically, but as you're moving west, where there's more liquidity in the market, rates will drop a bit, but you're still pricing those loans for risk.
Okay, great. Let's talk about risks. We talked about project risks, what can go wrong. Right now we are experiencing a very difficult geopolitical situation. A lot of people fear of stagflation, inflation, rising raw material prices. What do you think about this, Andres? And did you change your underwriting standards? And how do you stress loans? And what are you thinking in terms of risk management? How did it change your opinion?
So I think that the first change already came with COVID, where there were a little bit uncertainties in the market, and maybe investors were afraid. And already then we adjusted our risk assessment models. And ever since we have been very thorough with all of our projects, which means that even, as you mentioned, this raw material increase, we put lots of efforts into analyzing the construction budgets which the borrowers present us. We tried to get as much as possible comparable offers to the construction costs, and of course involve the borrower with personal guarantee and with their own equity to cover the potential cost overrun. So I think the inflation will remain, but of course the market, the end buyer, has also absorbed some of the price increase, and we see that in all of our countries there's still a housing crisis in that sense, so that demand is healthy, supply is low, and new projects are bought basically on paper. So I wouldn't be afraid, but of course I would take into consideration these aspects.
Okay, and diversification still remains important.
Yes, and also as our loans are quite short term, an average of the issued loans is 14 months, of the returned loans 11 months. So that means that we are always, like monthly basis, we are reviewing our risk policies and how the market is changing based on the country.
Yeah, so, I think it's an important element in the proposition of Estateguru, because in many competing propositions of private debt or private equity, you have an investment philosophy, you raise funds. By the time you have the fund, you invest, your investment period of 3 years, you have to take a 5-year view about the market. Yeah, here we have a proposition where you can actually ramp up very quickly, and the term of the loan portfolio is approximately one year, 1.5 years. So you don't need to take such a long-term view, and you are constantly adjusting. Yeah. And
also when we look at the last financial crisis, then for instance in UK, the real estate market dropped 15 to 20% in the course of 1 year. So, and if you look our LTV proposition, then it's like 60%. So we have enough buffer during the short term. Exactly, to sit it out and maximize value for investors.
Very good. Before we go to questions, I want to have a question to Marek, and maybe you can help me to show the last slides on the future. So how do you see the future of Estateguru, Marek, 5 years from now?
No, we see us as a leading platform for real estate financing and the investments. We are quite far already, but definitely there is much still to do in terms of building different tech solutions and getting more investors on board, and also expanding to other markets in Europe. We're looking to go to Netherlands, France, Italy in the next years, and basically cover most of the Western European markets. And also by having such a strong brand of real estate investments and financing, we also probably going to introduce some new products to our investors, and maybe also to look at the crypto space also, that how we can be connected to our business model. So far we have seen that this space has not been really ready yet, but we see it more and more going together. One point, and obviously AML KYC remains very important in doing so. But now, for example, there is a lot of different interesting real estate propositions still to be introduced to retail investors that they don't currently have access to. And I mean, the brand is very important for us, and we see that having a strong brand also enables us to introduce some other verticals.
Excellent. Do you see some potentials also for ESG or renewable energy linked projects where you can make a distinguished pricing to make sure that you enable access to financing for households?
Yes, for sure. We have a special team within our company who is now studying different options to include more ESG related subjects to our products and offerings, and whether it's energy efficiency or some other carbon credit or some other point that would then enable us also to accept the investment funds or institutional investors who actually need to deploy ESG related funds, and the cost of capital for borrowers definitely would be lower if they take this also as seriously, and then
Excellent.
we're already part of 2 organizations in ESG.
Maybe Judith, you can comment on that?
Yeah, we are. So PRI and Grassberry are two organizations that we are a part of. And just to the point about the energy efficiency, that's one angle. The other angle is the social angle as well, social housing. I think we've lent on social housing already, and so we continue to explore those options in the market, because we are funding SME developers. So low density housing, affordable housing, very sustainable product overall.
How about you, Andres? How do you see risk management in 5 years' time? Will you have more data, more accurate pricing? What do you think will be different for you in 5 years' time?
I think my team has grown 2 or 3 times probably, and I think that technology will be very, very important, and we try to integrate more and more APIs to make the process of risk management more efficient. So I think, quite an interesting path going forward.
Excellent. So thank you. I propose Marek would like to add before we move to questions.
One thing I wanted to add, that we actually, there's also one news to be announced that we actually launched today in Cedars. So if our listeners, some of them might be interested to become a part of our equity story, and there is also a chance to take part investing into Estateguru equity that we just launched in Cedars. So check out the Cedars platform. Okay, then we need to answer the questions to those. So what is your exit strategy in 5 years' time? Will you be private company or will you be listed? I think there are different options. Obviously, we don't know. 5 years is a long time, but I expect that our shareholders should have the ability to trade their shares when they have made this investment, whether then we make the IPO or we make our shares listed some other way. But I think that should be is at the moment most probable. But never know. Maybe we become a part of a big global company and there is some other trade. But I mean, being a founder and the shareholder, of course, I'm thinking how to make the most successful story to all the shareholders. So but currently, I think we have still a lot to achieve and to grow our vision and to really disrupt something in real estate financing and investments world that I don't really want to think about it at the moment, but I really thinking about how we make this product and offering much better.
Absolutely. No, it's great to hear, and of course we can offer other products. I mean, the value of 130,000 retail investors is tremendous. They are not on the platform for nothing. I think they have very limited access to competing products with limited amount of money, with deployment possibilities. So I think there is a huge potential to offer new products also to them. So I propose that we go to some questions. One question that I received was, what is the current floor rate for the financing on the platform? So do you have a minimum rate? And how does it compare with different countries on the bank financing? So are you competing with banks like in UK or Germany? And what is the minimum rate and what is the gap?
No, I think we have taken financed deals of really like liquid and quality collateral deals at the rate of 7. But I think it was pre-COVID when I think currently what we're seeing in Europe and in the world, the interest rates have gone up, and also being a partner in a development company, we also see that like in the big projects, banks were lending at 3-4%. Now they are also taking 6-7%, and in our case, we see that the slightly higher interest rate has not been a problem, but it's more like the efficiency of getting the deal done and serving the customer and speaking the same language as the developer or the borrower. But yeah, our interest rates currently are between, I think, 8 and 13, and the average is around 10.5. Yeah.
So 8 is, give me an example.
Currently 8, maybe.
Where do you give 18 and where do you give 13? And who decides whether it's 8 or 13?
So as I mentioned, we have this loan pricing matrix, which takes all the inputs, borrower, collateral. So you typically, when it's larger loan, maybe some development, then it's with higher interest. And when it's standardized city center collateral with experienced borrower who has taken many loans from us, then it's lower than 8%.
Excellent. How quickly do you adjust this? So how quickly are you able to adjust the interest rate? So when the COVID crisis hit, or when to the 24th of February this year, how quickly were you able to adjust?
Instantly.
Instantly?
Yes.
And
so
are you also adjusting back afterwards? So it's
no, when borrower has taken loans in stages, so and he now approaches us with a new stage, then of course this new stage will be with adjusted interest rates. So, but yes, all the new borrowers got instantly the new rates.
Excellent. That's another question about the origination. Do you use mainly brokers, or do you have your proprietary origination channel? What are the sources of origination? Maybe Marek.
There are some markets where loan brokers occupation has been a long time there, and there's a long history of brokering loans, such as UK and Germany. In Baltic markets, we rarely are using brokers. Sometimes maybe the property brokers that doing a side job of and brokering some loan also, and maybe in their cases our bridge loan helps them to actually do the sales. So but there are not too many brokers actually who are thinking bigger than getting their apartment sold, but some are, and they are also trying to catch two fish at the same time. But it's we are definitely open to work with brokers. We even have the ambassador program for brokers. And
what does it mean? How does it work?
Basically, it's basically they can refer us deals and becoming a Estateguru ambassador, and we're paying them a percentage of the loan amount as a referral. maybe the ambassador is more sexy name than broker. But there are some nuances. Yeah, we have a dedicated guy who's working on the program. They have a dashboard, and we are supporting them with the materials and some educational program. What is more, how our process works and our origination, so that they are aware what to expect from being a partner with us.
Mm-hmm. Okay, very good. In terms of geographical expansion, are you planning to go to new markets this year, and how do you adjust your risk management?
Yes, we are opening UK, or already have opened it and waiting for the start of the market. And in every new country, we have established a package of rules that we need to have local risk manager in their offices. Also, we have legal partners, local valuation partnerships, and also enforcement and debt collector partner already upfront. So everything for the risk management is already there.
Excellent. Another question, what happens in a worst case scenario? So if something happens with Estateguru, what happens with the loans of investors?
Mm-hmm. No, at first I'd like to say that Estateguru has a very strong shareholder team, or like the Estateguru has very strong shareholders. The founders, as I said, we are the also partners of one of the leading real estate development company, and if needed, we can support the business. Same time, we are backed by 4 different VCs. Speed Invest came in 2018, and TMT Investments, London Stock Exchange listed company whose investments also have Bolt and Pipedrive, some unicorns, and then 2 VCs from Switzerland, Verve and Swiss Immolabs. They came in last year in our A round. A Czech bank, J&T Bank, also joined the round. So our investors have ability to support the company if there is a need. Mm-hmm. Currently we don't. I mean, this negative cash flows is normal when you expand. Yeah, we have grown as a company about 60-70% every year. And we have a clear understanding where this money is going, and actually our volumes and revenue has been growing, and if we one day decide that we are not we stop the growth, the company basically could be profitable in the next 6 months.
Yeah. But what happens
if there is in how they say, in an unlikely event of default,
the black swan.
So we have put in place, as we are regulated in many countries, like for example we have FCA license in Lithuania, in Finland. We are in the final stage of having it in the UK, and we have also operating in Germany, and we now actually just submitted the pan-European license. So there is always this question by the regulators, that you should have the and we have backup service providers for servicing these loans that we have originated, and as the trustee is holding the mortgage on behalf of investors, it's basically we don't help the client accounts. Then if this kind of thing would happen, then the monies from the trustee are distributed to the investors pro rata of their investments.
So even if you disappear and your company disappears and everybody disappears, me as an investor, I can still get my money back.
Yeah, there are backup servicers in place.
Excellent. Let's move to the next question. Sorry, we have to speed up a bit. Does Estateguru exclusively fund deals from retail investors? Is capital market institutional funding in the mix? So maybe we can start with
Yeah, I mean, we have different structures for institutional investors, and maybe Judith, you can describe them.
Yeah, no, we've at the moment the company is 95% funded by retail, but then the various initiatives we have for the capital markets includes the fund that we have launched with the IF. We're in the market for that and raising capital for that. We are also looking at various funding lines to fund our pipeline. We have quite an enormous pipeline of real estate loans to fund. So we're looking at those, and those lines are quite large. They're north of 100 million euros. So we looked to the institutional investors to complement really our retail funding offering and to continue to grow that really, so the company can scale.
Yeah.
I mean, we've got very big targets, the next 3 years.
I avoided you with my question how Estateguru will be in 5 years' time, but if I ask you how Estateguru will be 5 years' time in terms of capital markets, what would be your answer? What would be the split?
I think the split could be 70-30% because I think the efficiency of the capital markets is there really for this product, and there's definitely lots and lots of benchmarks in terms of securitization for the product as well in the future, not now but in the future, and so I think that will create more products even for high net worth and accredited investors in our platform even. So I do see the two complementing each other.
Absolutely. Marek, what would be your thinking in terms of split 2027?
It very much depends also how is the embedded finance is developing. Because in parallel we are developing our capital market strategy, and I really hope that we have like 5 to 7 different institutional investors on board with the different structures, and at the same time as we are also trying to get more into the ecosystem of other fintechs, proptechs, wealth techs. There might be also I think a Estateguru product is a great product to have a like alternative to fixed income secure product, like for example integrating the Estateguru into apps like Revolut, where people could earn for 5% maybe more interest rate, and they could deposit and withdraw any time. And we have like these hundreds or thousands of real estate backed loans as a security. If this product is going to fly, that we hope it will, then the split maybe is different than 70-30 towards institutional capital. But we definitely want to complement each other, and we want to sustain the flexibility that if somebody would say that, close your retail platform and we give you 1 billion of line to fund your deals, then I would say that I'm sorry that this is not our strategy. We don't want to be dependent on a single line, but we want to sustain the flexibility of building the business and serving our customers.
Excellent. As we are wrapping up now, I'm going to revert back to the title of this bright talk, which is Estateguru Super Risk-Adjusted Return, Sources of Alpha Creation. If you look at this question, Marek, what are our sources of alpha creation?
That's a difficult one now.
People.
Yeah, of course. Just alpha or something. But of course, people. Yes, we have now 21 different nationalities working in Estateguru. And I'm really, really proud of our culture and the alignment that we have within the team. And we have every 3 months we have strategy days where actually all our people come together, and we are very openly discussing of our plans, and all the department heads are talking about what has happened the last 3 months and where we're heading. And to be aligned with everybody, I think that's definitely the strength that we see that we have. That we try to be as transparent as possible with our people and with our investors, and I think that's definitely the alpha.
Absolutely. People are certainly alpha. I mean, from my perspective as a person who is very closely following this business, I also do believe that the technology enables servicing borrowers that otherwise would not be able to serve at a very competitive price, which is truly scalable. I do see with my experience, banks withdrawing from below certain threshold, whether it's private banking, corporate banking, SME banking, it's very consistent. So the speed of execution and enabling borrowers to have access to funding and investors to have a very diversified and complementary portfolio that they cannot achieve via big underwriters, big banks, or big securitization projects is clearly where I see technology enabling us to make this difference. Judith, how would you answer this? What are the sources of alpha creation?
Yeah, I think the source of alpha creation, again, honing back to that, is the people, but also the braveness of the people. Really, I think everybody in the company is very brave, and they go and take each jurisdiction, and not be afraid of the competition, and do the market studies, and get in there and put their foot down and continue to originate and scale and create the volume. I think that's really a big part of that alpha creation.
I'm sure risk department is not looking at me that say people, so not people. What is your source of alpha creation, Andres?
I think that the local decision-making engine.
Yeah.
So I think we differ from banks who have maybe, yes, local presence, but their headquarters and credit committees are far, far away. So all decisions in Estateguru are done by local people, local independent risk managers, and I think there comes the difference.
And I think also understanding the real estate market. We haven't talked about it, but the key shareholders and founders, it's in their DNA. I mean, Marek, we very often do not acknowledge what we have, but I think you breed real estate,
Yes, definitely. Without that knowledge and background from the founders and the practical need for that product, we wouldn't have started the company. Yes, it's necessary to really succeed to know the details of how this market is functioning, and we try to keep ourselves up to date of everything. And unfortunately now we have a big team and local people that help us. That it's not anymore possible. The company is already so big that maybe in the first 3 years I looked at all the projects myself also and supported the risk team. But now Andres as a great international risk management team with many partners, and I'm really very happy that this department is working independently and professionally, and also people have come to this department from different traditional financial institutions. That the combination of this old school banking, financial technologies, data, and when we fine-tune this combination, then I think we get the best result.
Excellent. So I believe we need to wrap up. There could be many other questions, and I very much encourage the audience to connect with us via LinkedIn. I know from my experience that you all are extremely responsive and very engaging to answer any questions, and welcome any questions for further cooperations. So I would like to thank you, Andres, you, Judith, as Head of Capital Markets, and it was really great pleasure of ours to have you, Marek, at this bright talk. So thank you so much for your contribution, and thank you for listening to us, and we look forward to seeing you and investing with you and helping you in the future. So thank you. Marek,
Thank you, Gabriella, for having us here and moderating the panel. And I hope our listeners had a good time. Thanks.
Thank you for everybody, and also thanking the organizers, of course, who are behind the scenes, had helped us quite a lot to make this video happen. And maybe as a last point, I would like to thank the embassy to enable us to have this beautiful site in the middle of London.
Yes. Thanks.
Thank you.